So I'm going to introduce our speaker today. He is Seth Leon, and he's the Manager of Cooperative Services at the Alberta Community and Cooperative Association. He has a Master's of Development Economics from Dalhousie University. Seth also serves on the boards of Community Wise Resource Center and Co-op Zone, the co-op developers, as well as the Co-op Developers Network. I hope I've said that right, Seth?
That's great, yeah.
Great. Well, with that, I will let you take the stage and run with the presentation. As well as I mentioned previously, it is recorded. This presentation will live inside the dashboard. So if you know anyone else who wants this content, feel free to let them know that it can be found there after. And we're going to leave a little bit of time after Seth's presentation for discussion. So if you have any questions, you can either save them until the end or put them in the chat and we can feed them to Seth that way. Perfect. Over to you, Seth.
Excellent. Thank you. Well, welcome everybody, and thank you so much for this opportunity to talk about the cooperative structure and how it can be used to help accomplish acquisition goals. And I think Village Wealth has been an excellent partner to, one, explore how co-ops can provide a solution, as well as just understanding this business succession and acquisition opportunities. So what are we going to talk about today? This is what I want to review. So I was moving the video screen so I can see the slides as well. Is to introduce this concept of local investing and how that might be a different way of raising the capital needed to acquire a business. Also looking at how this structure can be used to engage a network of investors. So what are some of the other sources and other people that could be assets towards acquiring a business? I'm going to walk through a very, very brief scenario to illustrate how this works, and definitely use this as an opportunity to have a conversation about this. I think typically you understand this context the best and would have the best questions to advance this. Please keep in mind that although I'm going to be talking a little bit about some securities regulations, is that I'm not an attorney, so this is just very general information. And just keep that in mind as you're pursuing this to always enlist some legal counsel. So we'll get into it, and this should take probably about 20 or 30 minutes, and then we can get into a conversation. So just a little bit around the context, and I think this is perhaps why a lot of us are here today, is to understand how can we raise sufficient capital to buy a great business, right? Also, where we look at the other opportunity is there's a number of investors who would love to be able to be involved in these types of deals, either as an investor, perhaps as an advisor, to be able to protect their investment or be able to impact the outcome of where that local investing is going. I think if we're looking broader, and this is kind of where I come into it as someone who looks at economic development as well as cooperatives, is this idea that a lot of businesses are going to could potentially be leaving our economy. And how do we ensure that these great businesses stay local and that they continue to thrive? So they're going to need a new ownership model, perhaps an injection of capital, and I think some long-term commitments to seeing these businesses thrive. So kind of this is what brings us here today and some of the opportunities. So just zooming out into local investing, when we're thinking of the financing that goes into acquiring a business or just typical financing for any type of business, is we're looking at the pretty typical areas in terms of whether that's friends and family, a business loan, perhaps angel investors, whatever the context. But when we're talking about local investing, we're being a bit intentional. And firstly, one of the ideas that we think about is how do we take, say, capital that's being invested in Wall Street or Bay Street, and how do we bring it to Main Street, where those Main Street businesses exist? And also understanding that, the majority of small and medium-sized enterprises are the biggest employers. They're the most active in our economy, and they're really the drivers of kind of what makes our cities and rural areas grow. Often as well, when we look at local investing, it's the ability to connect the investor with the local business, and we need a vehicle to do that. So we can think of buying shares or bonds or mutual funds that are distributed into a range of businesses that typically exist outside of our local economy. They're all over the world, and we really don't have much interaction. But that connection to the local business does add a lot of benefit and creates a lot of new tools and opportunities when we think of the local pieces. The last two, when we think of, often small businesses or looking at the acquisition process, is that there's a need for financing. Is what's that gap if it isn't coming from institutional lenders or from the individual acquiring the business? So what are some of the other pools of capital we can access? How do we engage people in our community to be part of this? And then lastly, and I think I've mentioned this a couple of times, is when we invest locally, that means local jobs, that means local procurement, the local tax base, and lots of other aspects that come from this local multiplier effect. And that I think is something, especially when we're looking at COVID and economic recovery, is definitely an added benefit of local investing. Is just a stronger local economy. But that's probably a different presentation. So when we're talking about local investing, I kind of want to talk about what are some of the broad parameters and what's the sport that we're playing when we're talking about local investing. And then we'll look at how we apply that to the acquiring a business together with friends. So the first part of local investing is that we need to safely and securely invest our own money and the money of the other partners, of the other investors. And that's really the prime objective that we're doing it. So that's things like, has the due diligence been conducted? Are we following the regulations that are laid out by the Securities Commission? I'll talk about that in just a second. So to safely and securely invest other people's money, we need a limited liability corporation. And in Alberta, under the Alberta Cooperatives Act, there's certain rules that allow cooperatives to raise investment shares. And that's kind of the vehicle that allows the pooling of capital to then be invested into acquiring businesses or other activities. And so again, it's providing the limited liability under the Cooperatives Act. It's also providing a governance model that has been viewed in lots of jurisdictions, not just here in Alberta, as being very secure, that you have a board of directors that is running the cooperative. They're democratically elected by the members, and really they're kind of called to ensure that they're protecting the interests of the members. So when we're looking at how capital is raised, it provides a lot of oversight that tends to fit with this type of investing. You're putting you're localizing the dollars, but also the control and the oversight. So that tends to make maybe better decisions and adds that level of security and safety to this type of investing. I guess the last piece here is when we're looking at what type of investing are we doing is that you're really selling exempt market shares. So these are shares that can't be sold on a secondary market, like say the Toronto Stock Exchange. These are regulated by the Alberta Securities Commission. And there's going to be two factors that will play into it. And one is the registration requirements. Having to register with the Securities Commission will add some significant costs, but it will also allow the group to raise more capital. And then secondly is who are the investors, accredited or non-accredited. And as I mentioned earlier, not being a securities lawyer, I don't want to delve too far into explaining what these or speaking to these two elements. But when we're looking at using exempt market shares, these are things to be aware of. And in terms of getting started, visiting the Alberta Securities Commission website and reading up on the exempt market shares resources. They have an amazing resource guide, and I'll put it in the chat at the end to kind of get familiar. Again, like, what sport are you playing when it comes to local investing? It's around the exempt market, and these are the tools that you'll need to employ. If this is something that you're already familiar with, then you are very far along, and you'll be able to pick this up quite easily. So very briefly, as I mentioned, cooperatives and the Cooperatives Act is we've helped, as an association, helped to form about a dozen cooperatives that are that raise and deploy private capital through the sale of RSP and TFSA eligible shares to basically finance economic development in their community. So these tend to be mostly in the rural areas. So the first one was a group of, say, 22 people that came together to buy an abattoir. And the intention of buying this business was there was a lack of jobs in their community. There was a lot of out-migration, and they said, we need to invest in jobs and job creation. So they bought the only business that was for sale. And this is kind of the terms of what they operated around. This is just a very rough thumbnail sketch of what an opportunity development co-op is and what it does. So a group of member investors, they identify opportunities in a community. They're doing the due diligence, they're vetting them, they're assessing the financial model. How will they get a return on this investment, as well as perhaps make an economic development impact. They're incorporating this cooperative under the Cooperatives Act, and then they're going out into the community with an offering document, which includes membership into the cooperative and the ability to buy shares in the investment, and then the ongoing administration and reporting. This was a very short, very rough overview of what an opportunity development co-op is, but really just to get an idea of what's the legal structure that's able to raise capital, how it invests in the community, and then some of the oversight that goes into it. But probably the best way to explain it is just to show an example. So Local Investing YYC is a Calgary-based opportunity development co-op that was incorporated in 2018. And soon after their incorporation, they raised just over $500,000 with a group of about 30 investors. And they invested into 3 different businesses. So they bought equity shares into Fiasco Gelato, now called Righteous, and they lent money to Lowen's and Bifco, and to that kind of patient local capital, and together using that as a bit of a portfolio. So they didn't acquire these businesses outright, but they did invest in their growth and their long-term success, as well as connecting local investors to these businesses. They're currently in the process of raising $2 million to invest in more businesses. And we can think of this as kind of like a locally owned and controlled private equity fund. And this is a really interesting story. So I'll now elaborate, kind of moving from this idea of cooperatives that are selling exempt market shares to invest in local businesses and drive economic development, to a scenario where we can be in the acquisition space and maybe speak to more of the work of what Village Wealth does, and in that process of connecting buyers and sellers. The small coffee break there too, and into the next one. So in terms of the development pathway, if we're looking at buying a business with friends, so typically a group is going to come together around this common goal of saying, well, we want to acquire a business together. What are the financial objectives of acquiring this business? What are some of the strategic goals? What are perhaps the job creation aspects, or what are the expectations within this group as they're pursuing this type of investing? It's important, I think, from the outset to have some semblance of a governance structure or a decision-making process. Who is doing what in this group as they're exploring this opportunity? Who's accountable to the goals that this group sets out, and working that way? And this will, the reason I mention it is that a lot of this work will then go to inform the entity that is formed to acquire the business, and that you kind of are starting to think as a board of directors of, say, again, a locally owned private equity firm. One of the outcomes of the work that this group is doing is to create an investment criteria or a search criteria. So what are the types of businesses you'd be looking to acquire? What are the goals? How are you going to do it? As well as what's the feasibility assessment when it comes to the capital raising, the engagement process, and all these aspects. And I can speak a little bit more to what goes into that. But these are some of the things that the group is going to need to understand. And then as well, going out and doing the finding the business and doing the due diligence. As I mentioned, we want to create the vehicle to be able to pool capital and acquire the business. So you would be incorporating a limited liability corporation or a cooperative. And so you'll need a lawyer and the incorporating members. If you've incorporated a business before, this is probably pretty standard, but just moving from kind of the informal group of prospective buyers or people that are working together into actually forming the corporation. In terms of the capital raising, this is pretty standard. I won't spend too much time, but these are some of the 3 elements that go into, once the capital is raised, or how to go about raising the capital. And this is looking at a bit of a pathway that is borrowed from what groups like Local Investing YYC have done. But the reason I mention it is that as you're forming your group, this will be some of the work that you'll have to do. Now, if it's a small group of investors that are in close contact, that are committed to this project, this will be very easy to do. If you're looking to engage a broader group of investors, this will take more work. And as I mentioned as well, some of the securities regulations in terms of the exemptions and any registration requirements will inform this as well. But basically, some of the work is around forming an offering document. So what are you investing in, and what does the share structure look like? And of course, all the legal paper that needs to go around it in terms of risk disclosure, the trustee, how to buy the shares, and how to be a member in the cooperative, all those aspects, who's on the board, basically an investment package, but that is tempered towards local investing. And again, this is something that your lawyer would help to create. And we have some strong individuals that we've worked with that can do this work. The second too is really looking at the marketing and outreach to raise this capital. So how is your group going to go out and raise the money to acquire those businesses, if it's going to be kind of this networked or group approach? And then once you've hit the minimum share sale goal, how is the sale closed, and how are you transferring the funds from the trustee into the business? All of these aspects here are definitely, this is just, again, a bit of a thumbnail sketch of some of these key aspects. But when we're thinking of getting started, or even thinking of people that we can include, I'm sure there are individuals in your networks that have either experience with this, maybe have the marketing capacity, and could be a team player in this type of approach. In terms of a scenario, so let's try to bring this to life instead of just talking about some of the theoretical, say, bullet points. So in this example, there's a $2 million business that's for sale. So a group of 5 buyers, they say, well, let's go in on this together. We think that this is a great business. We could grow it, and by owning it together, we might be able to add really provide the capital that it needs to grow, as well as to be able to acquire it. But as a team of investors, maybe that there's a strategic advantage that it can offer. So in this scenario, the group of 5 are the 5 founding members of an opportunity development cooperative. In this scenario, they're all accredited investors. So they have less, say, regulatory compliance from the Securities Commission. They can invest in more things and with more leeway and with less cost, essentially. And they form the board. So they've done the due diligence on the business, and they're excited and confident to acquire it. They decide that one of the 5 is going to be the CEO, and this person has also decided that they want to be the owner. So they're going to contribute into this fund, into this pool of capital to buy this business. They realize that they individually can't take on the $2 million price tag. So they reach out to their networks to raise $1.2 million. They engage 30 investors at about $40,000 each, and that becomes, say, the ownership group. The vendor, the current owner, decides that they want to be part of the business for a short while, and they offer to be bought out over a period for 10% of the value of the business, $200,000. And then lastly, because they have a fairly strong debt to equity ratio, or they're able to leverage the equity plus the vendor buyout, is that they're easily well qualified to get a $600,000 loan, and any other kind of business technical support that from the financial institution to be able to kind of put this deal together. So in this example, we can see that maybe in that group of 5, they identified a business, but it may have been out of their price range or out of their capacity to take it on in terms of managing it, of getting the maximum benefit out of it. But saying, being able to go in with a group approach and then engage a broader network of investors, they're much better equipped to be able to take it on, as well as for the long-term success. They're well financed, and they have a good team at that kind of strategic board level to be able to execute. In terms of owning a business together, what this could look like. So as I mentioned, one of the founding members in the decides to be the CEO, or is appointed, or has shown that they have the capacity to carry this on. So they're running the business. So they're definitely more in the operational side. It's fairly standard. Like, if this may appear to be such as like a search fund kind of scenario, but also, they're wearing 2 hats. They're an investor in the business, and then they're also an employee of that business. So you probably want to have some form of conflict of interest policies in place, that the CEO isn't making decisions at, say, the board level that unduly benefit them in the operations. So for instance, if they say, well, I want a bonus or I want a raise, they could propose that to the board, but they might not be voting on that decision. So this is pretty standard conflict of interest type policies that we'll see in lots of firms. Where I see kind of the advantage is that both parties, the group of the 30 investors, as well as the CEO, want to see the value of their investment improve. So they should be pulling in the same direction. And I think that speaks to the second point, is that group of investors, or perhaps the board, could take on a strategic and advisory role, something similar to, say, a corporate board. They might be looking at the long-term success. They might be connecting their networks, as well as looking at a growth strategy. So we're talking here today about acquisition. How are we applying, say, the acquisition of this first business into, say, buying other businesses? And we can see, that how do you leverage the success of this first investment into the others? So that would definitely be helped by having a group of 30 investors, of having a board that is thinking long-term, and some of those aspects. So the story has kind of changed from, say, one business owner looking to acquire one business and being able to really scale this type of investing, as well as the success of the business. So again, this is a very kind of rough scenario, but we can see some of the elements that are reflected in it. The local investing concept is kind of the driver, the engine, and the cooperative structure allows for the oversight and the pool to be able to advance it.
Yeah.
Right. So I realize here I've covered quite a lot of ground. And this is why I think it's probably important to jump into some of the questions from the group, just to kind of roughly summarize it. So we started really broad around local investing, and that it has some benefits in terms of just developing local businesses, connecting investors to that local success. And I think that there's a lot of positive things that can occur when we localize capital. And to do that, we need a vehicle that allows for that local control, that local oversight, and local engagement. And that's where the cooperative structure comes in. And what we've seen here when we're looking at the acquisition space is how to have that kind of interaction between the group of investors, the CEO, and the business, and what are some of the added benefits that could come to it. So this is really a very kind of just like the rough overview of how it could work. But it is something that we are seeing a lot more uptake. I think that when we look at investors in Alberta, when we look at business owners, that they want to get invested, get more involved into local businesses. And when we think of the amount of businesses that could be leaving the economy, there's definitely, because of succession, I think that there's a lot of opportunities to explore. So we're just kind of getting started with this approach. And yeah, thank you for listening to the presentation. And I look forward to taking on some questions there.